We are covering these two top stocks with 100% plus gains today. While watching bullish price actions, let us inform you our review on IBO. Impact BioMedical Incorporated had one of those trading days that stops you in your tracks, up 107% in a single session, with 116 million shares traded and a market cap that suddenly leapt to $11 million. For a company that's been sitting quietly in the biotech undercurrent, this kind of move is like flipping on stadium lights in the middle of the night. But here's where things get interesting. This major spike didn't come on the back of a hot clinical trial result or a licensing deal. It came alongside news that a director just dumped a massive chunk of shares. So yeah, this story is layered, and it's definitely worth unpacking. Let's start with what Impact BioMedical actually does. The company is not your traditional biotech in the sense of running one flagship drug through the FDA pipeline. Instead, it's kind of like a biotech incubator, discovering, confirming, and patenting healthcare solutions and technologies, which they then try to monetize through licensing, co-development, and strategic partnerships. Their portfolio covers everything from small molecule platforms for cancer and neurodegenerative diseases to sugar-based technologies, air purification, and even functional fragrances. It's a broad, futuristic mix, and while that gives them exposure to several trends, it also means they're still early stage across the board. Their tech names are pretty sci-fi sounding: Linebacker, Equiver, Celios, Latos, and something called functional fragrance formulation, or 3F. Linebacker, for example, is a small molecule platform with potential in oncology and inflammatory disorders. Equiver and Equiver G are focused on antiviral and immune health. Celios is an air purification system. And Latos? It's an altered sugar formulation paired with myo-inositol, potentially for wellness or metabolic applications. Again, fascinating stuff, but none of it is at the commercial stage just yet. So from a fundamental standpoint, this is a pre-revenue, high-risk play with long development timelines. Now, let's talk about that insider activity because it's a whopper. Director Hung FAI Ambrose Chan just sold nearly 1.7 million shares, cashing out for over $1.1 million. That kind of move from a sitting director always raises eyebrows, especially when the stock is seeing an outsized rally. What makes it even more notable is that Chan was recently appointed as a board member and was being touted for his 45-plus years of experience in restructuring and steering public companies. So it's a bit of a head-scratcher. On one hand, his background could be a big asset in helping Impact BioMedical navigate partnerships or spin-outs. On the other, offloading a massive personal position so early in his tenure sends mixed signals. Despite that, the stock exploded today. Why? A few things could be at play here. First, low-float biotech stocks tend to attract momentum traders, especially when there's any whiff of insider movement, whether buying or selling. The sheer volume, asterisk 116 million shares asterisk, suggests retail was heavily involved. Combine that with the recent leadership shakeup, some low-key speculative interest in their tech platform, and you've got a perfect storm for a run-up. Also, when a stock's been beaten down as hard as IBO, down 56% year-to-date before the spike, it doesn't take much to trigger a short squeeze or a technical bounce. From a longer-term investor perspective, though, the real question is whether this company can translate its science portfolio into something tangible. They don't have approved drugs. They don't have commercialized revenue streams. What they do have is intellectual property, early-stage tech, and a network of external collaborators. If someone like Chan can leverage his connections to spin out a deal or land a strategic partner for one of their platforms, that's when the story gets more real. But as of now, it's speculative, interesting but speculative. The sudden rise in market cap gives them a little more attention and maybe even better access to capital. But the fundamentals haven't changed overnight. If anything, the director's sale suggests that even insiders see this as a good time to take chips off the table. Bottom line, this is a biotech stock wrapped in potential but still very much in the storytelling phase. The science has promise, the tech sounds intriguing, and the company's got optionality in multiple sectors, But execution, funding, and partnerships are going to determine whether that promise actually turns into shareholder value. For now, investors are along for the ride, and what a ride it's already been. Our review on AEHL, Antelope Enterprise Holdings Ltd., just made a big move that's definitely catching eyes in the small cap world. They announced a 1-for-40 reverse stock split, which isn't something you see every day unless a company is trying to avoid getting delisted from an exchange. In this case, the reverse split is a move to lift the stock price back above the $1 minimum bid requirement for NASDAQ listing. If they didn't do this, they risked being booted off the exchange, which would likely send the stock into a tailspin. Typically, reverse splits don't have a great reputation. They often trigger sell-offs as investors worry about what's behind the decision. But AEHL stock went in the opposite direction today, soaring 102% with 11 million shares changing hands and an intraday high of $4.94. That's a big jump, and it shows there's clearly some momentum behind this move. The reverse split reduced the number of shares outstanding to just over 1 million, which is a pretty tight float, and that can spark a short-term squeeze or bring in more speculative interest. But let's take a step back and look at what Antelope actually does. The company is primarily focused on live streaming e-commerce, a hot sector in China where influencers sell products in real time to their followers. Antelope is positioning itself as a one-stop solution for brands looking to tap into this growing market, offering everything from tech support to hosting and operations. While the live streaming e-commerce model is gaining steam, it's still competitive and very much in the execution phase for AEHL. They also have a business consulting and software development division, but the live streaming angle is where investors are likely looking for growth. Despite today's spike, AEHL's market cap is still just $3.5 million, so this is a microcap stock with plenty of risks. But that's what makes it interesting for traders looking for quick momentum plays. The reverse split certainly helped the stock price, but the question now is whether the company can use this renewed attention to drive meaningful growth. If they can land more partnerships, roll out successful live streaming offerings, or show progress with their business model that could justify a higher valuation. For investors, this is a classic speculative play. AEHL stock has a lot of volatility, and while the recent surge is exciting, it's important to remember that there's still a lot of risk here. They've bought themselves time with the reverse split, but now they need to deliver. If they can keep the momentum going, maybe this company's next chapter could look very different from its past. But for now, it's definitely one to watch closely. High risk, high reward, and a lot of uncertainty about what comes next. Please subscribe, give the video a like, and watch more from our playlist. Thanks.